G'day guys, welcome to the channel. My name's Tim, and on today's episode we're taking a look at this section of Bitcoin and we're looking for clues to see whether we might be correcting or crashing and how we can tell the difference. Okay, let's get stuck in. So what I'm going to do is have a look at what happened in 2021 in this section up here. I'm also going to have a look at 2017 and also 2013, and I'm going to try to find what are the clues. So the first thing I'd like to draw your attention to is the 50-day moving average. And you can see here in 2021, and this is very different from the previous cycles, which I'll show you in a minute. You can see that we bounce off the 50-day moving average pretty nicely up until this point. At no other time in this cycle have we crashed through the 50, especially that decisively. That's a real slice through butter. Now that was a warning sign, but that on its own is not enough. That combined with the lower high, I believe, is the killer combination. So when you see Bitcoin cut through the 50-day moving average like that, and then it does a lower high, that's the death combination. So right now in 2021, you can see the 50-day moving average is rising up like that, and we don't know whether it's going to go down just yet, but I suspect that we may follow a similar pattern to either this, to what happened in 2021, or a similar pattern to what happened in 2017 and 2013 in both those cycles. So we're looking for this combination of slicing through the 50-day and then doing a lower high. Okay, so it could go down like this, and then it comes up and does a lower high, and that's probably the sign right there that we're heading down. Okay, now before we call that as that's the definitive answer there, cut through the 50-day, lower high. Let's have a look at 2017. You'll notice that in this case, we didn't actually, after we reached this peak, we didn't cut through the 50-day. So you could be forgiven for thinking that, okay, we might go off and away and keep doing higher peaks. But you'll notice that even though we didn't cut through it, we did a lower high and then we cut through it. So again, that combination of the lower high compared to that, and then cutting through, that's the sign that there's bad things to come. Okay, so in 2017, 2018, it did it in the reverse order. It did the lower high first, then it cut through the 50. Now, if we go back to 2013, which was a double peak, we're going to have a look at both these peaks. Okay, so this here is peak 1 in the 2013 cycle, and the peak occurred on the 10th of April 2013. So you can see once again what we did is we kind of pierced through the 50-day moving average, but you could be forgiven for thinking that's it's a V-shaped recovery. So you don't really know at that stage. So what you're looking for next is the lower high. And then we did the lower high, and then from that point onwards, we really started to struggle. So that was 2013 peak 1. And then you'll notice we did a second peak and we had a very similar pattern. So again, we pierced through the 50-day moving average. And again, it was a V-shaped recovery. We had these engulfing candles here. We went straight down and we went straight back up. But then we did the lower high. And then from that point onwards, it was all downhill. So that combination of piercing through the 50-day and doing a lower high in whichever order. Because you'll remember in 2021, we pierced through it first and then we did the lower high. So that's the combination to look for. So I suspect over here, if we do start to correct at some stage, let's say we come back to say there, the question is, do we pierce through? And if we do pierce through, then I would expect a lower high. If we have that lower high, it means there's a good chance, a very high probability we're going down. If we don't pierce through and we bounce off and then do the lower high and then go down and pierce through, then that's another sign we're going down. If we bounce off and then come up here and do a higher high, then it's probably a healthy sign for Bitcoin that it will probably continue this run up. So those are some of the factors to look for: crashing through the 50-day and forming a lower high in whichever order. If that happens, then based off past history of Bitcoin, it usually means we've got a lot of downside to come. Okay, so I'd like to show you just one more thing So we're looking here at the 2017-2018 cycle that we just looked at, where we bounced off the 50-day, did the lower high, and then crashed through it. What I'm going to do, I'm going to grab this swing low to this swing high, and I'm going to compare it to what we're seeing at the moment with Bitcoin. So let's move it to this current rally. Okay, so this was essentially the big run-up that we had in 2017. So if we overlay that here, it just shows you that rally we just had. It just shows you how powerful that rally was, even though it may turn out to be a relief rally. It could be the start of a new cycle. We'll see what plays out. But look at how it compares to 2017. Isn't that just incredible? Now, if you overlay 2017 I did it about there, you can see it's very similar. So imagine if we had have just come up here instead of going down and up. That was essentially the 2017 cycle, from the swing low to the swing high before we crashed down. And now it fits inside this relief rally. So it just puts things into perspective of how crazy 2021 was in comparison to the previous years, even though the cycle top was only a 3x from the cycle top from 2017. So anyway, I hope you enjoyed that video. Please subscribe, like the channel, follow me on Twitter at TechnicalTimCR1. And until next time, cheers.